Dear traders, ladies and gentlemen, we are finally coming to episode number 21, where we put everything together, where we give a complete overview of the market causality. This is a very important video, so make sure to watch it carefully. So let's review what we looked at in the previous episodes. At the beginning we talked about the dumb money positions, how the smart money algos detect those and push them into loss. Okay, this is very original content. You don't find this aspect anywhere else. Okay, like you don't find this content in a book or on another channel. Then we talked about stop hunting, that of course in the end the algos are taking out stop accumulations of the dumb money participants. And then we talked about the interaction of the two and how it all works, how the stops are taken out subject to the dumb money positions which are on the way. We went into more detail by talking about the time and range principle, all the pre-run counter moves. We also looked at post-stop hunt moves, like once the target has been cleared. We talked about dumb money tolerance. We talked about the feared enough squeeze mode, okay, when the market is in a trending mode and the dumb money just keeps on going on one side and gets squeezed out. We talked about 4-hour reversals, which are very important once, for example, the squeeze collapsed. Then we looked at the net loss indicator and possible reversals, which pull the dumb money traders back into loss. Then we analyzed the economic news, how they are abused by the algos to implement their plan. We talked about also the plausibility in terms of economics. Then we went into detail regarding some short-term topics, the option strike targets. Again, this is very original work. I'm not aware of any other places where you can find this kind of insight. So the MK web shows you the option strike targets live on the chart. These are very good signals. Just remember, we are not trading against squeezes. We also looked at the order gap zones, how they are filled whenever it's convenient for the algos. We looked at over leveraged dumb money positions and how the smart money loves to do pullbacks against them to kick them out. Then we looked at the newest indicator, the semi-smart positions, which are a brilliant way to either confirm or find new trades. Very powerful indicator and the latest version of the MK web. Then we took a step back. We talked about the moving averages on the day chart and how they are targeted by the smart money algos because the dumb money traders are taking those into account. We also distinguished between inner range and outer range situations. We looked at the correlations between different FX pairs such as euro dollar and cable versus dollar yen and dollar cut and so on. Then episode 19 we analyzed the whole smart money algo cycle and how always it goes from one phase to the next. Now it's actually repetitive. Then we talked about the no learning principle and the consciousness levels of traders. And today we will go more into detail. So this is my little agenda here for today. So this was the overview. Now we're gonna look at some specific setups via the free mini course, which you can find on the website. Then I'll show you my journaling. Then I'll show you some trade examples when you want to trade the market causality outright via the MK web. I'm going to cover also weighting setups correctly. So basically placing more lots for setups which are high quality, high bias, and less for some which are lower bias. We look at how different time frames can be used for analysis. Then we will actually look at the MK web live and see whether we find any trade setups and do some live analysis. So that's going to be fun as well. Then I'm going to quickly talk about different ways you can use the MK web, such as in combination with a statistical template, a strategy, or bots, or just trading the MK outright. Okay, and then we talk about the remaining topics in trading, such as risk management, psychology, discipline, just very briefly because it's going to be separate videos. So after that, you really have exclusive knowledge about Forex. And actually now with all the topics, you have a complete overview of Forex trading, how it's done in the right way. So that's pretty cool. Good. So let's get started then. Let's go to the website. So here you see the free MCA course. So if you click on it, we come to this page. Okay. So here we have a list of setups. The bread and butter trade, okay, the MTS, the medium term stops on the M30 and 1 hour chart, like here, okay. 2 MTS below the price, there's also an SDS as you can see, okay, boom, the price goes down, takes them out. So short trade towards the MTS, so trading the actual target run. Yeah. Setup 2, MTS plus reversal energy, okay, we call this the golden combination, the golden combi, like when you have an MTS in the right direction and then you also have the 4 hour reversal energy, okay. Like here, you see the price was down here, we had an MTS above the price, and when you go to the 4 hour chart, there was also like the conditions met for a 4 hour reversal trade, okay, with the long is leaving, short is coming in, so down money switch. So you're having 4 hour energy on your side and an MTS as an upper target on the low time frame, so boom, you know, it gets taken out, okay. And after what happened, once it took the upper target, they actually went also for the lower target. Yeah. Okay, then the MTS plus also 1 hour MTS. So you have, we call it a double tap. So on both time frames, the 30-minute chart and the 1 hour chart, you have MTS above the price. So you know, they're going to take those out. That's always nice, a double tap. Option strike targets, remember, okay, do not trade against the squeeze. Like here you see, look, the signal came, but it did not get instantly filled because we had longies coming into the market, you see. So first I need to take out the longies. Once the longies collapsed, okay, you see that's an entry. Longies are leaving, then the OSDs get filled. So here you can buy, okay. By the way, also, look, the lower MTS got taken, so you can actually enter into the option strike target trade, which is in this case also a post stop on setup. You see the lower MTS has been taken, the price turns, so here you can buy towards the OSDs. You see already how everything can be combined. It's not rocket science. If you understand all the single components, it's not very difficult to understand what you have to trade live, okay? Here again, 4 hour reversal with down money switch, okay, as I said before, the long is leave, the short is enter, down money switch, the low has been cleared several times. Okay, so, and here also we have a net loss indicator. Some shorties are even into profit. So they push the market up, they do a 4 hour reversal up against the money sellers. Yeah. The squeeze mode, trading into the squeeze. So if long is buying, and the squeeze goes, the indicator points up. So you can sell against those buyers. We'll come to other examples soon. Alright, order gap zone trades and SDS trades, okay, so as we know, the smart man is always trying to fill everything left and right. Yeah, like here, look, with an MTS with an order gap zone, also an SDS, so that's a clear target here at the high of this grail. The algos want to clear those targets, and they do. The upper, the lower, okay, they always take out everything. LTS runs, especially in the squeeze mode, so we have the long-term stops, the pink lines. This happens typically when the market is out of the range, so it already run a lot in one direction, and then these long-term stops are within reach. These are the situations where people think, oh, it came down so much, it can't come further, but it does. Okay, so we trade short, even though it's an expensive entry, we trade against those down money buyers. We know the algos will clear those stops and kick those out. They will not do a reversal up to let those guys win here. Okay, so we understand that now very well. Post MTS pullback, we mentioned it before, you see the upper one gets taken and there's a counter move down. Not difficult to understand, just again, don't trade against the squeeze. And then day chart trades, like, you know, the clearing of moving averages. Like here we have longies coming in, so they go down against them in a squeeze mode and clear those moving averages, okay? Good. So these are examples for some concise setups. What I would like to show you now is my journaling. I mean, as many of you know, look, I for many years, I did like a daily market analysis as well as then for individual trades. And we're talking about, look, thousands of documented, journaled days and trades, okay, going back years and years. I just want to show you this to motivate you to do your own journaling, like here with an internal website or in some other form which works for you, but where you literally, you document all days for yourself, and then, you know, this enables you also to learn better. And the same for all trades. Okay, look at that. I've documented so many trades over years, where, you know, I literally document every trade with different screenshots, okay, and I've done so over a long time, and this of course is worth gold. Have the discipline to do something like this in order to enable, so that enables you to get better, to also understand the market causality better. So what we're going to do now is we're going to actually look at those trades, at least some of them, and we're gonna look at some concise examples, which is really helpful. Like here, you saw December last year, euro dollar short. Okay, so what's going on? You remember what I showed you just before the LTS setup. This is literally the same thing, okay? Euro dollar came down, that was on the 13th of December, 1.035. Look, we have only longies above the price and the stops the LTS below the price. Why should euro dollar do a reversal up? They wouldn't, okay? They will clear those out. And yeah, it's a bit weird to sell at those low prices, but that's exactly what you got to do, okay? This is the typical failed reversal. And if you see a naked chart, you would be so scared to sell a market which came down so much. It's against human nature, obviously. But that's exactly what you can do with the MK web. You can often enter expensively, knowing that there will not be a simple reversal which would let dumb money traders into profit. Okay, I hope this is really clear now. If you don't understand that basic fact, please go back and watch all the simple series episodes one by one in chronological order. Okay, so let's also look at the different factors. Look, we have the dumb money longies in the market. Okay, we have the dumb money longies, the buyers dominating. We even had some little shorties a bit into profit. Above the price with all the longies, so this is an actual resistance. If the price goes above here, this would get into a profit. So why should they do it? They will break down and take those stops. Not in one go, but in this case they were quite aggressive, as I remember. Boom. Okay, look at that. TP hit. Okay, look, and on the lower time frames you see how they literally do a pin to the large SDS, like you often see the LTS SDS together, and they're gonna do the kill. And a move away from the MTS, like in those situations the MTS is not dominant. The squeeze is dominant, okay? Also take note that the semi-smart money went short, okay? This semi-smart traders are selling, the dumb money is buying, so the price goes down. Not difficult to predict, this is a very clear case, okay? These are easy trades, high confidence trades actually. Okay, let's continue. End of Jan this year, dollar yen. So we have two MTS above the price in the range, okay? We have SDS along the way, with some shorties coming in, and then even the squeeze line going up a little bit, okay? So, plus even the dumb money shorties being here in profit. So, why should they go down, you know? They can go up, take those stops of the dumb money sellers within the range, take the SDS, just visit those longies here. Look, those little longies are within the dumb money tolerance here. They're just to those little pullbacks, but eventually the price will go up. You understand? So easy long trade. Plus you have 4 hour reversal energy. So we're talking about the golden combination, okay? You have the band has been cleared, shorties into profit, shorties coming in, so dumb money switch from longies to shorties, so boom, okay, not difficult. Buying on the hour chart towards this target, when you take profit here, your stop loss like here, balanced, yeah, in this case, like 1-to-1 roughly. Okay, no rocket science. Easy trade. Okay, pound yen, that was on October last year, so the price went up with an MTS below the price. This is nothing special, this is like a thing you often see. On the high time frame on the day chart, you see also we have the moving averages below the price, we have some longies coming in. So boom, okay, simple MTS trade. Took an order gap zone on the way, took an SDS. You'll see how several factors just come into the same direction, like planets align, and then you know you can risk your gap, you can go for it. And actually all 3 MAs can even be cleared with this down move as well, okay? And also interesting, look, after what did they do? They went for the upper MTS and order gap zone, yeah? And then back down. Look at this precision, you see? The market is not random, you get it? It's not random. It's all rigged. They take the lower one, they take the upper one, they go back down. Yeah. Beautiful. Euro Aussie short, 2024. This is interesting because look, it took this MTS, it took this MTS, it took this order gap zone. It came down, only kissed the order gap zone, but there's still an MTS, but then the longies come in. So the dumb money is buying. Why should they go up and let the dumb money longies buy, win? Yeah, it doesn't make much sense. So they actually complete the job, even though there's some pullbacks, and eventually they take the target, okay? So again, expensive entry, but there was no squeeze in the way. 19th of 9, 24 euro yen long. Oh, this is also very interesting, this trade. Look, on the day chart you see shorties below the price if the money short positions, okay? Then you have the MAs above the price. And then you have an MTS above the price as well. Okay, so you buy towards the MTS against the diamond shorties. You see, even an inner range trade. Again, not difficult. Dollar cut long. Ah, this is interesting. Jan this year, because look, we have so many shorties. You have the squeeze against the shorties, a short squeeze. Above the price, we have the LTS. Why should they do a reversal down and let those shorties win again? No, they won't. They do those crazy exaggerated moves. It's a squeeze mode. They will take the LTS, okay? This is when you can buy expensive into the market because the sellers are all on the wrong side, the red bars, okay? You understand? It's not rocket science. So what happens? There are news and whatnot, but here look below the price, only the money selling positions. Even though they're reduced, there's still many, so why wouldn't they just finish the job, which is what they do, yeah? And this year they did it with a big gap to the upside, a weekend gap, yeah. Boom, that was beautiful. Okay, clearing the upper stops against the dummy shorties. Then they collapse, so they do a move back down, yeah. Which experienced traders can trade as well, by the way, yeah. Look at the stage chart, look at that, you see? We're moving here, boom, exaggerated move, taking the LTS and then back down. Short is leaving, so normalize down. You see, it's all the time those games. All the time. Euro yen, interesting trade as well. MTS above the price, some order gap zones. Short is below the price, long is expanding, so you can buy towards the MTS, okay? There's no squeeze in the way, it's within the range even, so they can do a normal pullback. If you go to the higher time frame, again you see the short is below the price, so why wouldn't they go up? Yeah. So they took the upper MTS, so very cool trade. This one a bit more complex, so but nevertheless interesting. Here recently with the OSTs below the price, I actually posted this publicly, and they filled the option strike targets with precision because the shorties were leaving. So you trade the OSTs. You see, now you need to wait for those setups. Okay, you need to wait for the planets to align. You shouldn't just analyze all the markets with the MK web and just randomly place trades because there's some factor which goes slightly in your direction. That obviously doesn't make much sense. Okay. You need to wait for the right moments, and of course it takes a bit of practice, not much but a bit. So actually let's actually go to the MK web, and let's look around whether we find anything to analyze. Australian dollar looks pretty random now, so that's not a trade. We're not trading this, it's just within the range. Okay, here Euro Aussie today, as expected, took the upper MTS. If you find it in the blog as well, I posted it this morning. Okay, so typical trade like I showed you. You buy towards the MTS, okay? So here I did the post and the price was here. You buy towards the MTS, your own stop down here. That was a good trade. Well, Euro pound filled this option strike target. Euro dollar at more short is coming in, so going up against those sellers. And as you can see, there are some longs in the way, but they can go up and take this LTS, for example. So Euro dollar still looks a bit bullish. Okay, it can go up a little further. See it here on the forward chart. Okay, but once it cleared this upper target and the short is collapsed, then it can do a forward hour reversal down. But it doesn't seem to do it now. You see, like why should they turn down now? It doesn't make sense. They will not. You see, the shorties are still selling, so they will go up further. Okay. Pound Aussie had posted it today, even publicly. Beautiful OST trade. Okay, I posted it down here. Just buying towards the OST is super easy. Yeah. We had even for our reversal energy as well. So these are the simple trades I was talking about before. Pound yen, that was yesterday. Look, it exactly took the OST and then turned. Okay. So you saw the short is leaving to go sell towards the OST. Beautiful trade. Pound dollar took the upper MTS from this morning as well. Look, shorties came in, so buying towards the MTS, standard setup. Okay. Now I should say, in this context, of course, when the trade quality is better, you can put more risk per trade. Don't go crazy. Respect the game. Okay, the professional traders, they're not risking more than 0.5%. Yeah, they keep it small. There's no need to go crazy. Remember, over leveraging is the #1 killer in forex. Don't do that. And always wait, determine the leverage based on the quality of the setup. Look here, for example, dollar yen. It's very likely it just takes us lower STS. You see, there's some longies in the market. Why shouldn't it go down and clear those? You can easily do that. That's of course the low bias trade. Silver, once the shorties are leaving, they can look. They filled today. They filled the first OSTs. If they want a second OST, they need some shorties to leave more. But for the next 15-20 hours, it can happen. You see. Gold took the upper MTS with precision, and the previous look took this one, took this one, took this one from today. So that also was predicted on the MK web. So you see what I mean? This is basically what you got to do every day, all the time. Okay, you have to analyze what's going on and find setups. Now, let me show you this diagram. Okay, there are different ways to use the MK web and trade the causality. So what I've shown you now is basically trading the MK outright, which I've done on YouTube even for years. You find all the old live trade videos. I'm saying euro dollar should go down, and then 2 days later it does in most of the cases, you see, and it says the money switch. But what's also a good idea, and I'm doing a lot of this right now. I'm having my statistical template, and then I use my template just as a scope for the MK trades. You understand? It's like you have a gun and you have a scope on top. Okay, so this is the MK web, and this is my statistical template. And by the way, just pick indicators which feel good for you. It's not about the indicators. Okay, they don't have an edge. If you just trade the indicators, you will lose money. But if you just do your analysis on the MK web and you know what's going on, where the stops are, where the dumb money positions are, where the order gap zones are, where the option strike targets are, whether there's a squeeze or not, whether there's 4-hour energy, whether there's a moving average on the day chart, yeah, whether there's STS, whether the news are coming, blah 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 blah. Then, for example, you know, oh, like I showed you now, euro dollar looks bullish. Well, I go to my template. If I get a long signal, a bullish signal, I'm going to trade this with confidence, and it may also help you to place your own stop right. Okay. So combining statistical tools, but it's about the edge comes from the MK web, of course, not from any indicators or signals. Don't ever go to signal sellers. It's all BS. Okay. These are, I can show you hundreds templates and indicators which look good some of the time. It doesn't work consistently. Otherwise, this game would be easy. Otherwise, we wouldn't go out of our way to create this technology and offer it, you know. But the truth is, today, with all the AI out there, you need it. Okay, we are basically the last bastion against AI. When it comes to human versus machine, man versus machine, we are the last tool man has. Of course, there are other ways to use MK. Some people, they use automated systems for the complete trade execution, and then they switch it on and off depending on what's going on in the MK web, or they select certain pairs depending on what's going on the MK web. For example, see in MTS, they tell their bots, look, only buy today in dollar yen or whatever. You know what I mean? And then they switch it off when there's no bias. There are people doing that as well. There are different ways to play the game. But the decisive factor is this, okay? The MK web is your actual edge. I don't think this is very difficult to understand. As you can see also, the different time frames, the human brain does not have a hard time combining the information of different time frames, and conducting multi-time frame analysis. That's an edge. For a bot, that's very complicated, okay? You need to program every detail, and then quickly things become very complex, okay? Nice. So you see now that how this can be done. In the final episodes of this series, we're going to look at statistics and psychology and discipline, what you shouldn't do, like over leveraging, over trading, and all that stuff. And finally, we look a bit at broker manipulation as well, like slippage and spread manipulation. And then we have some final comments. But so now the MK content part basically ended. I hope you liked it. Please study it correctly as I've laid out in front of your eyes. Save yourself pain, save yourself problems. Okay, you don't need it. Like, I wish I had this tool when I was starting out, or that somebody offered it, but it didn't exist, so I had to create it and find the right people and do it and offer it. And hopefully I will be able to continue offering this, and because it's just incredible. Look at that. Filling the auto gap zone with a pullback against the shorties, you see? Boom. Same as smart now, he's long. So it's not that much information once you understood every component. It just looks overwhelming maybe at the beginning, but to be honest, the more experienced traders, they instantly see the value. Yeah. Look here, option strike target, auto gap zone, MTS, STS. This is so well laid out that even, you know, that it took a long time to find the right way of displaying with the right colors so that it's all completely intuitive. The sellers are red, the buyers are green, and they are the target, okay? And down here, the semi-smart participants, they are on the right side. Semi-smart when it's short, price goes down. Yeah. It's aesthetic, it's visually efficient for you to quickly see what's going on. And of course, it takes a little bit of practice, so give yourself time. Yeah? And as I also said, and as I always said before, okay, so first study, okay? For example, I made this course here, study episode 1 to now 21. Watch it. Then maybe go to the channel and at least watch some of the older videos, maybe the market overviews where I was doing live analysis. Maybe go back further, do some watch some live trades and so on. Check whether you understood how this works. Then get the MK web. At the moment it's just £59 per month. I hope we can keep up this low price, but for that we need more people. And then once you have done that, trade on demo at least for 2 months and prove to yourself that you can implement the market causality in your trading. Once you have passed all this, then you can go live. Okay? Now, do not gamble. Do not over leverage. Do not trade without a stop loss or exit strategy. Do not over trade. Okay? You can still mess everything up by doing those things. Okay? Approach it as a business, not as a hobby. Otherwise it becomes an expensive hobby quickly. Like I knew this one client, he would be so good in doing the analysis, okay, and he would have such a good hit rate. This is predictions. But he would over leverage and gamble around and still mess it up. Don't do that. There's no need for that. You want to make money, isn't it? You want to make pips. So this is your chance now. Okay, you have a perfect tool. This is as close as we get to the Holy Grail. Okay, and it's bloody complex. Look, still after all these years, no one has succeeded in replicating something like this because it's so complicated. Okay. But you don't need to worry about all that. Okay, you have the edge of the MK web. So that edge makes sure that your equity curve doesn't go like this, like any statistical system. Okay, it makes sure that over time you know what's going on in the market. But still, in order to maintain stability, you need to do the other things which we talk about in the next videos. Yeah, you need to have proper. Sorry, you need to have proper risk management. You need to have discipline to wait for setups and all of that. And then you need the right psychology mindset. Yeah. Day in and day out, okay? This is a marathon. It's not a sprint. Okay? So make sure that you do not mess things up. Okay. That was quite a lot of fun. It's funny because my original plan was just to make like a few videos, but in the end the whole simple series ended up being a nice overview. Yeah. And of course, if you want to go more into detail, get the MK Web video course. There I have like many exclusive videos which are not on YouTube, where we talk about the meter levels, we go really into depth, okay? So the things which were sometimes only quickly mentioned in this series are there really explained into detail, and I really recommend it, okay? And then if you are committed and you're fast, you can become a professional institutional grade Forex trader, believe it or not. But the reason why so many people fail in general is, of course, because you need all these components which I've shown. One is not enough. Some people say it's all about psychology. No, it's not. You need an actual edge. And that's the complexity. Otherwise, you start system hopping and so on. And that edge is the MK Web. Okay. You need the edge, you need proper risk management, you need proper discipline, you need proper psychology. Okay. That translates into a good trading performance. Okay. And you can do prop trading and all kinds of other things, or the sky's the limit. But these things have to be in place. You cannot afford to have too much weakness in one of those areas, and not many people realize that early enough. They realize it too late. You can't afford to don't have a proper edge. Statistical indicators and systems are not the solution. They don't have an edge. They will all die. So you need the MK Web. You need risk management. Don't risk exorbitant amounts on a single trade. Avoid concentrated risk. Don't trade in a concentrated way where you need to have certain trades going one way or another. Look at it as a portfolio. We're going to talk about it more soon. You need the discipline. You can't be good on 3 days and then on the last day of the week lose control and just gamble and do silly things and over leverage and do revenge trading and trying to do P&L chasing and force profits. Don't do that. Okay. So you need to have the proper psychology and mindset, which includes patience to wait, okay, emotional control, focus, sharp analysis. And then what happens at some point is, because you get more experience, not only tape reading but practicing, then you're in the flow, and that's the best feeling, okay? If you reached the flow state and you don't need to consciously think about all the different components, but rather you have done it already so that your brain kind of automatically does this. Super interesting. Then you can reach impeccability. Okay. Which means you have so much discipline, so much mental strength that nothing can seduce you. If you have a losing day, you stop trading and go home. But then the next day you are on point. Not many people are able to operate on a very high level. It's a high performance task, okay? Because you have to do that day in, day out. But it's possible. As I said many times. Even with an average IQ, if you follow the steps, you do the things in the right way, as I show here, take it seriously, and you do your homework, and it's not massive neither. It's not rocket science. Then you will reach this, okay? And once you understood that it's not about single trades, but it's about many trades over time, then you will have the right mindset to just do trades every day. Now what happens then? Well, it will at some point become boring, but that's for the video about this topic. Okay? Professional trading is boring. It does not matter whether this or that trade works or not, or hits your stop loss. But what is fun is Pippin. Okay? That's where your fun should come from. Winning while everybody loses left and right. Okay? But it shouldn't come from dopamine rushes where the euro dollar goes up in the next 2 hours. Okay? Common sense, isn't it? It's common sense. And there are traders out there, and please consider this, that who may not have a great edge. They may have like pretty bad systems compared to the MK web, but they may be so good with all the rest that they can still make money, you see? Despite being at such a disadvantage, not knowing where stops are and where the dumb money is and whether there's a squeeze or not, or whether there's an option strike target or all these things. Can you imagine how hard that is? That is the reason why this number is maybe 0.02% of the all market participants, you see. Now with the MK web, this is reachable. Then you are part of the top 5%, basically. Okay, I personally am very, very passionate about this, as you can hopefully feel and you can see also by the multi-year effort. I've taken myself big risks to do this year, and it's not clear whether this overall will result into business success for me. That's not clear. Okay? It depends also on people waking up. Unfortunately, at the moment, many people are giving so much attention to incomplete, inaccurate approaches, such as, let's say, ICT, and they're not even aware of these kind of tools which you need. Okay. And then when you have 1,000 people, most of them, they just want to get rich quick. They want to be sold an unrealistic dream. They follow those scammers. They want to believe that. But this is very misleading. As you know, and as I've said before, most people in general, like people on the street, they're better off doing some kind of long-term ETF investing. They will not get a Ferrari next month, but over time, the odds go in their favor. But if you insist on doing active forex trading in 2025 and beyond, with all the algorithmic manipulation, this year is your chance. Okay? As simple as that. Here you see what's relevant. And the algos can't just take advantage of you, whipsaw you, and confuse you and stop you out, no matter whether you bought or sold. Still, you need to know what's going on and do some work, but it's doable. People have done it at this point, okay. Not thousands of people, unfortunately, because our reach is still small. That hopefully improves. But people have done it and they still do it. Some of them have been there from the very beginning. And many people who tried it, they stay with it, because after they stop looking at the MK web, they realize it's all just, they are blind, completely blind. What chance do they have, looking at a naked chart? See what I mean? If you could just look at price patterns and derive any edge from that, you know how easy it would be to just create bots who trade that. That's not how this works. None of those setups which are having fancy names work consistently. That would be pretty easy, isn't it? Not predictive. For consistency. All right. Thank you for your time and focus. Please share this with people who you know are trading Forex or who consider to do it. Every time you show them that you help someone, maybe you prevent somebody who is retired to lose all their savings, or you help somebody young to do it in the right way and to not lose thousands of pounds in courses and indicators and fake gurus and signal services and commercial bots and all that stuff, social trading, all that stuff which does not work. Okay. I hope you liked this. Please leave me a comment if you did. I wish you all the best. Stay safe. Lots of love.